Four of the Magnificent Seven reporting this week. Which one of these reports this week do you see having the biggest impact on the markets?
Well, I think the one that's going to be most controversial and is kind of a consensus long is Meta. But if you look into next year, the street is looking for 13% growth at Meta and 10% growth in the advertising business at Google. And you think about those two companies together, that means they'll be bringing in $40 billion of additional revenue in their advertising businesses next year. And the question really is, where's that going to come from? I think your previous guest alluded to the risks around the consumer. And Meta is a company that gives guidance for fourth quarter. I think people will be looking for reduction in expenses, but it's going to be whether they can sustain that top line growth and bring in that absolute level of spend that's going to be really controversial.
So you're saying it's all about consumer strength. I mean, remember last week, or was it last week, where we saw that better than expected retail sales number? We keep hearing these projections for considerable growth this holiday season, but you're saying you have doubts about companies willing to spend to chase those consumers, it sounds like.
Well, I think there's two things that you have to separate. One is the consumer spend, which is facing a lot of headwinds, whether it's student debt repayments, it's the lag effect of interest rate rises, it's all the various pressures piling onto consumers, higher energy prices, and so forth. And on the flip side, what you've seen in many of the big tech companies is steep reductions in their own expenses. It's not just headcount expenses, it's pullbacks in advertising spend and so forth. So their margins will be fine. The question is, can they find enough top line growth in their overall businesses? And again, you have to take in mind the scale of these big tech companies versus their smaller peers.
I want to talk top line growth when it comes to cloud infrastructure. Of course, we're talking Amazon, Microsoft, and Google, their cloud business. Really the growth driver for each one of these companies. What are you expecting from these results? Are you expecting to see a reacceleration in this cloud business and any shifts in market share, any noticeable shifts?
So what you saw with these cloud players is that they all faced a reduction in growth because companies were optimizing. And whilst they couldn't take away the licensed software that they committed themselves to, they could reduce how frequently they were compiling their apps or managing workflows in the cloud. Now what you'll see happening is maybe not a reacceleration, but hitting that trough point in growth rates at the likes of Amazon or Microsoft. But again, you have to look at the scale of these businesses. Microsoft is a $180, $200 billion software business. You compare it with Europe's largest competitor here, SAP, it's $30 billion. And smaller companies like Workday and ServiceNow are $7 or $8 billion businesses. So the scale that these companies need to bring in terms of incremental revenue to grow is quite daunting.